Hi, and good morning, and welcome to WWTD 2022, Day 2. That's right, Investing Tomorrow. Today, I'm Mark, once again, your friendly neighborhood MC, here on behalf of Tiger Brokers to bring you Day 2. That's right. Just a slight recap for those of you that are just joining us here on Day 2. In Day 1, yesterday, the videos are all online on YouTube as well as on our Tiger app, okay? We covered 4 themes yesterday. We looked back at 2021, and then we looked forward in this year, the geographical outlook in the region, as well as in China, US, Asia, Asia-Pac, and we went on to the thematic market outlook yesterday. Today though, we're going to take things to the fundamentals of investing as well as advanced trading strategies, okay? So I've shared with you what we're going to do now, but before I continue any further, just a quick shout out, okay? Comment down in the comment section, wherever you're from, you know, whichever time zone you're at, let us know, say hi, okay? I'm going to be your Tyson, okay? For my non-Chinese speaking audience, that means your God of Fortune today. I'll be giving away, all right, a lot of coins in values up to 288 Tiger coins, okay? So 88, 188, 288, and then I'm feeling really happy. I'm going to give you up to 388 Tiger coins, okay? So you want to make sure you download the Tiger app, okay? And you can comment down there, okay? So for those of you tuning in on YouTube, remember, okay, even if you comment there, we can't give you anything, okay? So you got to download the Tiger app so I can give you and bless you with these coins, all right? So very quickly, we're going to speak about the experience store, because here at Tiger Brokers, we're not just all talk about work and investing and no play. We're all about play as well, okay? So once again, as I mentioned yesterday, for those of you tuning in again, all right, our experience store is from the 8 and 9 yesterday and today, okay? From 9 a.m. to 8 p.m., okay? The last entry, of course, 7:30 p.m., yeah? And here's the thing you need to get there, right? Besides many photo opportunities, okay, very nice setup there. We got a claw machine that gives away great prizes. These are the prizes. Okay, I'm going to give you 1 second to take a screenshot. All right, 888 Tiger coins. All right, limited edition Tiger Brokers merchandise, Apple AirTag, amongst many others, okay? And here's the thing, we've got participating outlets because, you know, Tiong Bahru is an area, for those of you not in Singapore, Tiong Bahru, next time when you come, okay, it's an area for cafe hopping, very famous place here in Singapore, okay? Drips Bakery, Cafe, Chapter 55, Tien's, as well as Old Shifu Charcoal Porridge, okay? Giving away free gelato, free cup of coffee, 10% off, etc. All right, so head on down there. And here's the thing, when you're doing your cafe hopping, all right, very important, make sure you find the Tiger doll. Why? Because you get another chance at the claw machine, okay, which gives away all those awesome prizes I shared earlier. Now, okay, for those of us that are a little bit more eco-friendly or haven't got your EV yet, we've got the shuttle bus for you. Very simple, 9 a.m. to 7 p.m., Tiong Bahru Plaza, 30-minute interval. The next slide, I'll show you. These are the details. I'll give you about 3 seconds. Take a screenshot, okay? So you know where it is and how to get there, okay? All right. Now, this is the last day also. For those of you on our Tiger app, you're wondering, hey, how else can I milk this event a little bit more, okay? You just got to go to the landing page on our Tiger app and click the surprise egg. As simple as that, and you can have daily vouchers up for grabs. I heard it's from now all the way to up to February or even March, all right, this year, okay? All right, so head on down, go to the landing page. There's a little yellow egg, okay? Yellow egg, and then you click on it, and you're good to go. Now, enough of me talking. What I'm going to do right now is to show you what the experience store and the participating outlets in Tiong Bahru is like, all right, from our video we took yesterday. So please sit back, enjoy, and feast your eyes on your very first course of entertainment today, this video. there we have it. That's the experience store. Once again, it's open today as well. Okay, it's open now, in fact, all the way until 8 p.m. Okay, last entry 7:30. Okay, don't worry, this is for our Singaporeans, but don't worry for our international audience, wherever you are right now, I'm going to give away some Tiger coins, okay? I've not forgotten all of you. Okay, very quickly, type down in the comment section below, which is the location of our experience store, okay? No need the full address, just tell me where is the experience store, okay? The first 5 that comment, all right, will get 88 Tiger coins, all right? Very quickly, the first 5, okay? While you're typing down, let me just share with you, for those of you that are starting out on your investment journey, we've got a great deal for you here, and this is the Unit Trust Starter Pack, all right? You expose yourself to global equity and global bonds and get up to $50 off today. How do you do it? You can scan this QR code, or if you are already in the Tiger app, very simple, go to the Discover page, and the top banner there, you can click on Fund More. Click there and read up more, okay? Like we heard from all the speakers yesterday, all right? It's all about research. So you want to be informed, okay, before you make your decision and your next step. So very important. This is for those that are starting out on their investment journey. There's another announcement for all of you, okay? If you are a student, all right? If you're wondering, hey, is this something that I can consider as a career? You know, there's no better way, all right, than sitting down with someone who's already in their sector to have that chat with them. So right here, take a screenshot of this. All you got to do is visit the experience store, like I mentioned, complete a quiz, and you can stand a chance to be invited for a networking lunch with one of these 4, all right, expert houses here, all right, okay? Very important. I'll give this another 1 or 2 seconds right here for you. Okay? All right, once again, this is for exclusively for university students in Singapore, okay? All right, next up, I have not forgotten those of you that are a little bit more down the road in this investment journey, and it's the 3 zeros. Okay, it's 0 subscription and redemption fees, 0 interest on margin loans under USD 1,000, all right, and 0 commissions for micro futures. Okay, so you can scan this QR code. Once again, I'll leave it up here, all right, for you to screenshot it or scan it, all right? This one is for you to help better your investment journey and take you to the next level as you evolve and grow, all right? Last but not least, I told you, whenever I mention about the 888, I always say Chinese New Year is not here, but we at Tiger Brokers, we just like to give everything in advance. We are like the Chai Sen year, because why? This is the year of the tiger. Okay, so on that note, we've got the Ang Pao Bonanza for all of you. All right, it's very easy. Here's the thing, you are collecting cold hard cash. Cold hard cash, I repeat, okay, cold hard cash. All you got to do, scan the QR code, all right, collect your Ang Paos on Cash Plus today. I believe this is all done through the app as well, okay? So once again, for those of you tuning in on YouTube, all right, come on down, download the app, and stand a chance to win cold hard cash. Once again, for the Ang Pao Bonanza. All right? So that brings me to the end of all the house announcements. Enough of me talking. We are here for the real deal today, and that is to talk about the fundamentals of investing in the morning session. Without further ado, ladies and gentlemen, please put your thumbs up, like this, and share, because we're going to invite Jonathan Ang, founder and operations director of 10X Capital, talking about value investing and the principles. John.
Good morning, my fellow friends. Today, I'm very happy to see all of you tuning into this session, and I know that you committed your weekend just to watch this session. I'm going to do everything in my power in this next half an hour to make sure your time is worth. All right, so today we're going to cover some topics on how you can consistently profit from the stock market in a safe way. Okay, so before I go into my slides and my content, I want to share with everyone that we'll be having a Q&A at the end of the session. So if you have any questions, feel free to write them down, and later on we'll be covering some of the questions or burning questions that you have. And one thing is, I want you to be glued to your screen because in this session, we'll be giving you lots of Tiger coins. Okay, so I'll be having activities and I'll prompt you and say the first person who answers the question right will actually get Tiger coins. So be sure not to leave this session and watch till the end. Now, just a quick introduction about myself. I've been featured on radio before, investing for 8 years, and also co-founder of this investment course, Growth Investing Mastery. Okay, and I'm also share openly my investment thesis on my YouTube channel, Invest with Jang, J-A-N-G, and since inception, we actually have over 500,000 views on the YouTube channel. So if you're someone who's interested in investing, do check this out after the webinar as well. Now, this session that I'm going to conduct will help 3 groups of people, right? So if you're someone who's looking around for a solution that works, do stay till the end because I think you will not be disappointed. And if you're someone who actually lost money last year, I can almost empathize with that. In fact, it may seem a little scary, but just have faith, right? And just watch through the presentation because I'm going to show you a very logical way which you can actually approach investing and not guess at every time you actually make a trade. Okay, and thirdly, if you're too overwhelmed by too much information in the market, this presentation will definitely help you as well. Okay, so I started like most of you, probably most of you can relate to this, right? So I've tried trading, momentum trading, day trading, forex, options trading. I also tried futures on options on futures, pardon me, and also futures as well. So I just want everyone to type in the Tiger Brokers app chat, right? Make a guess, right? Did I succeed while trying all these methods, right? So the first, just type yes or no. The first person who actually gets it right will actually get a coin, right? So this is just a quick participation to start this morning right and give out some nice prizes. Okay, so I'm just going to wait for a while for all of you to type either yes or no. Okay, so for those of you who type yes, right, thanks for having faith in me, right? But for those who type no, this is what happened for me. In fact, I didn't get much results. And I think most of you can probably relate to this, especially when I was doing trading. I could actually make money maybe on Monday or get returns of 100%. But on Friday, I'll kind of lose my money back all to the stock market. So I was kind of like making money and losing money as well. And I found it very hard to find a consistent method where I can make money and keep that wealth, right? So keeping that wealth was actually more important for me. And I couldn't find a method that could give me that. And then I chanced upon this method called growth investing, long-term growth investing. And eventually I was able to get pretty decent results. And I was very happy because instead of putting my money in the bank, which now gives you less than 1% per year, okay, I was actually generating pretty decent results. So I just want to make this webinar or this presentation something that's very practical. And I want to share with you a personal story of how I decided that long-term growth investing is for me. Okay, so I went to look at the Forbes top 10 richest list, right, which is shown on your app right now. And you can see that there's something that everyone here has in common, right? You see people like Elon Musk, Jeff Bezos, Mark Zuckerberg, Larry Page, and even Warren Buffett. Right, there's something similar that they all have, which I realized, is that they are all long-term owners of businesses, right? So you can see Elon Musk has owned Tesla for more than 10 years, right? And you can see even Bill Gates as well. He started Microsoft way back, and he's been owning shares of his own companies, been owning the company for at least a good 2 to 3 decades. So I asked myself, right, are there any traders? Are there any option traders, future traders, forex traders on this list? And I don't see it, right? So I was just thinking, if I really wanted to make it in life, I really want to succeed, then I have to also own a business. But that's just a problem. I don't think, back then when I saw this, I don't think I was very talented, right? I think just like most average people, starting a business is something that's very unheard of. It's very uncomfortable. The need to think about pouring your own capital to start something that may not work out, that's really scary. So I asked myself, right, what could be the solution to this? How can I be a business owner and just be as successful as Larry Page, Elon Musk, Bill Gates, and also Warren Buffett, who is the world's richest investor? And then I realized that the solution just lies right under my nose, right? And that is this invention that was created almost 100 years ago. Right? In fact, I believe that this invention is one of the greatest chance for anyone, any layman, if you're not born in a rich family, this is your greatest chance to actually make it in life. And I feel that this is the most wealth equalizing instrument ever created in the world. And that is the stock market. Okay, so a lot of people do not know that when you buy a stock, you're actually a legitimate business owner of that stock or that company. So let me just give an example. If you buy a share of McDonald's stocks, you're actually owning the real business, right? Literally, your CEO of McDonald's is working for you as an investor. The employees of McDonald's is actually working for you. So when you own a share, you're actually a legitimate business owner. And why this, I personally believe that this trend or this realization is not realized today is because technology is so advanced. Back then, when you buy stocks, you literally get your stock certificates to certify that you're a legitimate business owner. But now everything is digital, so most people do not realize this. And think about it, right? If you look at the Forbes top 10 richest list, and you feel that, okay, I may not be as talented as Elon Musk. After all, this is someone who can actually read textbook and build rockets by himself from scratch without having a teacher. He self-taught himself how to build rockets. If you feel like you're not as talented as him, then why not invest in his company, right? So when Elon Musk's company prospers, right, you prosper together with the rich, right? That is the way you can actually gain this entire capitalistic society. This is the biggest chance for you to prosper together with the rich, okay? So this is why I'm such a firm believer of the stock market. Now, you can see that, if the stock market is an instrument, right? But if you approach it with a different perspective, you can get completely different results, right? So for someone who's actually an educated investor, he sees himself as a business owner whenever he buys a stock. Immediately, he will definitely not want to buy lousy stocks, right? Because you want to own good businesses, right? Imagine if your friend asks you to invest $10,000 in his or her business, right? Obviously, you ask, is your business earning money? Does your business have debt? And everything, right? But the funny thing is that when people buy stocks, they don't ask the same exact questions, right? In fact, they go into buying stocks, just treating stocks like numbers on a chart. Okay, they don't see it as a real company. So if you can actually switch your mentality to become a business owner when you buy stocks, you'll do much better in the long run, okay? So I've proven to you that, the top 10 richest people are all business owners, and this is a method that could potentially work for you, right? So the next question you might be asking me is that, John, how can we invest safely? How can we choose the right company, right, to actually invest and put into my portfolio? So I'll be sharing with you some practical, real-life examples in the next few sessions. But before that, I just want to go through an activity. What if I gave you a crystal ball that could help you potentially predict stock prices? Okay, by the way, I'm just kidding. If anyone tells you that they can predict stock prices, please run far away from that. But I'll give you a framework that can give you almost to the similar effect, but not 100%, right? So investing, there's nothing that's 100%, but this framework is something that I've been using that gives me a high chance of actually succeeding and choosing the right companies. Now, I want to go through with you this activity right now, and be prepared to type, okay? Because this activity, I'll be giving out coins, tiger coins. So I want to ask everyone here, who is the latest world champion in the world of chess, right, in 2021? So I give all of you about 30 seconds to 1 minute to just make a guess, right? So if you're someone who's not, I think probably most of you may not know the answer to this. So the fastest fingers will actually get the tiger coins, right? You can do a quick Google search. Likely you'll see the name of the gentleman that's actually the champion in 2021. Okay, I know this may not make sense, but later on, after I review this entire activity, you understand why we actually run through this, right? Because it's something that's very similar to how we can find great companies in the stock market. So I'll give all of you another maybe 10 to 15 seconds. Okay, so just type down who is the world chess champion last year in 2021. Okay, in fact, it was just recently concluded. All right, so if you got the answer, congratulations to you. But if you haven't got the answer, I want to show you something, right? Just in life, if we look at the track record of things, right, we can actually kind of have some aid to predict what's going to happen in the future. So if you look at this slide, right, if I show you the world chess champion for the past 10 years, can you now predict who is the world chess champion in 2021? Yeah, I think it will be quite easy, right? Because from 2013 to 2018, you see this dominant name called Magnus Carlsen, right? So if Magnus Carlsen is winning the chess championship for the past 4 times in the past 4 world championships, then the chances of him winning again in 21 is very high. Okay, and true enough, in 2021, he actually won the World Chess Championship again. So how is this related to investing? Okay, so in investing, when we buy into a company, we can actually look at the track record of the company, right? So what do we look at exactly? Okay, we look at the track record of their earnings, right? So I think it is pretty logical and it is quite fair to say that, if a company has been increasing their earnings for the past few years, then chances of them doing well again next year or 2 years later is going to be very high. So I'm going to prove to all of you with some examples here. So this is the stock price of Adobe. Most of you probably use the Adobe PDF. Okay, it's something that you guys probably are aware of. You can see the red line represents the earnings of Adobe. Okay, it's going up. And can you see something very interesting? The black line, which is the stock price of Adobe, is actually going up. Okay, in tandem, right? So there's actually a very strong correlation, right? If the earnings of a company is increasing, the stock price will behave in the same way as well. Okay, but I just want to drop a disclaimer. This examples that I'm going through is not a recommendation to buy or sell, but it is for educational purposes to share with you some concepts on how we can apply it to your investing journey. Okay, next, I want all of you to be prepared because I'll be giving coins for this activity again. We have these 2 companies, right, Singtel and Microsoft. So without showing you the stock price, right, just by looking at their earnings chart, which company will do better in terms of stock price? Is it going to be Singtel, the telecom company that we have in Singapore, or is it going to be Microsoft, right, the tech company that most of you probably use, right? In fact, I'm using Microsoft PowerPoint slides for this presentation. Okay, is it going to be Singtel or Microsoft? The first person who answers the correct answer will actually get, okay, Tiger coins. Okay, I'll give you guys about 5 to 10 seconds just to type in your answers, right? Is it going to be Singtel or Microsoft who's going to do better in terms of stock prices? All right, so let's take a look. So you can see very, very clearly Singtel's earnings was actually going down. Microsoft earnings were going up, right? So naturally, it's only natural for Microsoft stock prices to do much better than Singtel. Okay, in fact, for the past 5 years, Microsoft stock prices have went up by 412%. Okay, but for Singtel, because their earnings were decreasing, stock prices have gone down by 35% for the past 5 years. So you can see this is something that's very logical. You don't have to gamble or guess whether if they are going to do badly. Just by looking at the earnings, you can some degree of certainty, right? How are they going to do in terms of stock prices? Okay, another example, you can see Japan Food Holdings, which is actually a listed company that opens up ramen joints or Japanese food joints. And then you can see Visa, which is, I think, not a stranger to many of you. If you have a credit card, likely you will know this company called Visa. So make a guess again, right? The first person who guesses it right will actually get Tiger coins, right? Is Japan Food Holdings or Visa stock prices, which of them is going to do better, right? Just type Japan Food Holdings or Visa in the Tiger Brokers chat. Okay, the first person who gets answer right will get it right. All right, I think it's pretty straightforward. Just look at the earnings trend. Is it going up, sideways, or downwards, right? So chances are the company which have a better trend will actually do better in stock prices. Okay, so I'll review the answers now. Obviously, right, you can see Japan Food Holdings for the past 5 years, stock prices have given investors almost no returns, right? 0%. Whereas for Visa, stock prices have appreciated by 171%. And very interestingly, you can see it is not a surprise that Japan Food Holdings stock price is sideways, right? So some investors may think, why are my stocks going sideways? Probably it's because your earnings are actually going sideways as well, right? This is the cause of the stagnating stock prices. So it's always very important to look at what we call earnings or what we call fundamentals of a company. Okay, so I want to share with you, because some of you may think, John, of course, you may be an expert or you may be an advanced investor. Of course, you can spot these companies. But I want to share with you that these are not uncommon companies. In fact, some of you may be even consumers of these companies that are doing very well. Okay, in fact, you can take a look at this Apple, right? A company has increased their earnings tremendously for the past 5 years. It has gone up by over 400%. That is 5x your money, right? For every $1,000 that you invest, you actually become $5,000. Okay, so next you can see Facebook up 184%. I believe most of you who are tuning in today, probably the last time you used products and services of Facebook was actually yesterday, right? If you use WhatsApp, Instagram, or Facebook, right, you're actually using products and services of this company called Facebook. And then you have actually Netflix. Okay, I think most people around us, if you ask them if you have the Netflix subscription, they'll probably actually say yes, right? You can see Netflix has actually grown by 367%. So these are not companies that are not common. In fact, they're just right under our nose. We just need to put on our investing thinking cap and ask ourselves, what are these common products and services that we see around us, right? And are these companies listed, right? If they're listed, you can check out their earnings if they're doing well, and you can potentially look at them to invest. Okay, so to sum up, a good track record, okay, is the best safety for investors when we invest into stocks or when we invest into companies, in my opinion, right? That's the most grounded approach, most scientific, most logical approach that we can have when investing into stocks or into companies. Okay, so I just want to share about this concept that, our eyes should be stuck onto the fundamentals of a company, not the stock price, right? Because at the end of the day, we have to understand, right, that the reason why stock prices go up is because of good fundamentals, right? So that's the cause, right? Fundamentals are the cause, and the effect is actually an increase in stock prices. So a lot of people fixate their attention onto stock prices, right? But that actually doesn't really do anything, right? If you look at the stock prices more, it doesn't mean the stock prices is either going to go up or go down. The stock prices doesn't recognize you as a human, right? It works independently, right? So what you want to do, right, or maybe your time as a retail investor can be best spent, or it can be much better spent by just focusing on the fundamentals of a company. Okay, so this is a key takeaway that I want all of you to take away from this session. Now, I'm going to address something which really holds dear to my heart, because this is the reason why most investors, they actually give up in investing. And that is because of the volatility that they experience in the stock market. And there's this very common misconception that volatility is risk. And I'm here to share with you why I do not think it is a risk. In fact, it should be seen as an opportunity, right? So I want to share with you, this is actually the stock price versus earnings of Microsoft, right? So you can see the blue line represents the stock price, okay, of Microsoft, and the orange bars that you see below is the earnings of Microsoft. Okay, so I just want all of you to type in the chat box, right? Is the earnings increasing, decreasing, or sideways, right? Is it increasing, decreasing, or sideways? So just type in the Tiger Broker chat so that I know you're with me and you understand this presentation so far, right? Type increasing, decreasing, or sideways. So you can see very interestingly, back then during COVID, because of a lot of fear and uncertainty and doubts, right? What we call FUD, F-U-D, okay? Stock prices of Microsoft actually came down. But I want everyone to think about this, right? When you start thinking like a business owner, right? When the stock prices of your company come down, does it mean that Microsoft stops earning money? Right? Does it mean that Microsoft stops all its operations, it fires all its employees just because its stock prices come down? Right? The answer is a big fat no, right? In fact, it doesn't make sense. Microsoft, in fact, runs on a subscription model. So even if stock prices go up or down, they'll still charge their customers money and they will still continue earning revenues, right? So as a business owner, what I like to do is always ask myself this when there's volatility, right? Is my company going to go bankrupt? Is my company going to stop earning money just because stock prices come down, right? In fact, the reverse is the truth. You can see, despite a drop in stock prices, the earnings of Microsoft actually went up during that period. It actually increased by 25%, right? So guys, this is the madness, the insane madness that you see all the time. Here is a company whose earnings are increasing. It should be worth more, right? But the stock market is irrationally punishing it. So if you are an educated investor, you have that conviction, you've done your homework, right? You've bought into this dip, you actually make a lot of money, because after that you can see Microsoft actually rebounded. In fact, today it's rebounded to a very high percentage ever since the COVID crash, right? So this is how you can understand that volatility does not say anything. Volatility does not affect the fundamentals of a company. Okay, that's something very important to take note of. Okay, so this is my formula that I actually follow, okay, to do decently. Okay, so really try to keep your investments dumb and simple. One of the main mistakes I made when I started 8 years back is to have FOMO, is to fear that I keep missing out. Right? And that's the reason why I tried trading, because I saw my friends getting 100% returns, right? But I want you to just think, right? If you're able to compound your money at 20%, actually in a matter of 5 to 7 years, you can actually double your money, right? So do not underestimate what you can do in the long term, because most people overestimate what they can achieve in the short run, but they heavily underestimate what they can achieve in the long run. So if you can be patient, right? And I always like this quote, this interview insight by Warren Buffett. Okay, so Warren Buffett was actually asked by one of the interviewers, right, why, if your method works so well, if fundamental investing is so great, why are not everyone rich, right? And Buffett says, because no one wants to get rich slow. Okay, so if you are willing to be patient, you can ride through the entire journey slowly. You're willing to take it slow, you will be rewarded bountifully at the end of the journey. Okay, hone dear life onto fundamentally strong companies and keep them for the long run. As long as your companies do not have high debt, they're increasing their earnings or their revenues, then do not give in to the market fears, right? Because if the market is fearful and you sell out of fear, then you become the market. To do well in investing, you must not cave in to the craziness and the irrationality of the market, which I've proven to you, right? As long as you focus on the fundamentals, stock prices will rebound as long as your company do well in the long run. Okay, so now this is the end of my sharing, and now I'll invite Mark to come back with me and we'll go through some Q&A with the audience together.
Hi, John. Thank you so much for being with us again today. This is the first time from yesterday to today someone invite me. Usually I invite them. So thank you. Thank you. Yeah. It's been a joy and a pleasure to be here. A very quick question. We have got some from the audience. They are just streaming in right now. Very first question. Okay, John. Then after that, I'll ask you some personal questions.
Of course.
So that the audience can understand a little bit more about your journey and maybe what is the journey ahead for you, okay?
Okay.
All right, so I prep you first, huh?
Yes.
Okay, so the question is, from the audience, how do you determine a company can have at least 25% growth consistently, John?
Right, so Mark, I think that's a very great question. In fact, I think that what you can do is to find out what is the total addressable market for this company. So for example, if you are investing into a tech company and there's a huge circular tailwind in which many big companies are actually moving into softwares, they're adopting softwares to become more efficient, especially with the work from home situation. I think that it is actually very you have some confidence that this company can continue growing at 25%. So one thing to note is actually just look at the track record. So if the track record shows that they've been growing at maybe 10% for the last 3 years, then chances of them growing at 25%, I think is
it's a bit hard, far-fetched.
Yes, it's a bit far-fetched. But if they have been maintaining their growth at 25% for the last 3 years, then there's a good chance that they're going to continue that as well.
Okay.
Yeah, so that's how investors can look at it.
All right. So you heard from the man himself. Look at the track record of the company, 25%. If you want to see whether it can last 25%, you need to look at how well they have done or whether they have done that amount, right, in the past. Now, next question then, John, is your view on China tech, because just now you mentioned tech, right?
Yes.
The tech sector. What's your view on China tech and how do you suggest we allocate capital for buying the dip?
Right. So I think that's a very great
Maybe
question.
you can share with the audience. Bear in mind also, maybe some of our audience here are also new to this investment journey. Okay?
Yes.
As you share.
Okay. Yeah. So I think for me personally, I do not really invest a lot into China, but I think it's a great country. I think there's a lot of growth. In fact, there's statistics to show that the most innovative countries in the world is number 1, US, followed by China, and it's not it's not a surprise that China is catching up very, very quickly.
They are,
right?
indeed.
So the only reason why I do not invest in China is because I do not reside there, and I feel that I will be more comfortable to understand the cultural nuances of how businesses work there, and of course, reading annual reports in Chinese, that is something that's a bit tough for me. I'm more of like, I can speak Chinese, more of like a banana in a way you can call it.
Banana for our non-Singaporean audience, that means, yellow on the outside but white on the inside. That makes the two of us.
Right, so I feel more comfortable investing into US companies, and because I actually, where we reside in Singapore, is where I actually am a consumer of most of these US listed companies.
I hear you.
Right, and I don't really use, for example, some of the top stocks in China is actually Alibaba, JD.com, and Tencent. I don't really interact and use their products and services much. And I feel that that is very important for myself to have conviction when I invest into these companies. So it's not a matter of whether China is bad or China stocks are not good, but it's a matter of myself and my own comfort level, my circle of competence.
And your conviction to the product and the company and the culture in a sense.
Yes.
Many C's from the man himself here. Okay, very interesting then. Just going to throw you, when do you think you will start, or will you possibly start in the China market? Because you see, this case in point, there was a time when you began your journey in the US side.
Yes.
So when for China?
I think the day where, I think it will come a day where China will become a big powerhouse that is very hard to ignore. And that's where I think if an investor really wants to invest, I think investing into the top Chinese companies, for example, I think Tencent, JD, Alibaba, these are companies that is actually economic powerhouse of China, right? So these are companies that you can consider looking at. But personally, my own preference, I prefer JD.com and also Tencent. Not a recommendation, it's just my own personal preference.
Sure. Yeah. So we are interested to see actually how this journey for John and even those that are further down in this road of your investment journey, at the end of the day, we are always learning from one another. We're always growing on this journey, right?
Yes.
So that very nicely brings us to another question, which is the one I asked you earlier.
Yeah.
You shared with us where you came from, how it all started, and then I probed you a little bit on, when China, But what is the road ahead for yourself in this investment journey of yours, and maybe also for your company?
Right. So I think for me, it's just to keep things simple and to learn from my past mistakes where I tried to always find the next shiny object. Where if I just invested in some of these companies that I shown in my slides earlier, Facebook, Visa, MasterCard, I have made so much money. I mean, the returns are real. It's all for everyone.
The figures are there. The numbers don't lie.
And I think really understanding that keeping it dumb and simple is really the key to doing well in long-term investing. That is becoming more and more significant. So the key is to just, ironically, not to do so much, right? So in investing, I always share with my friends that the stiller you stand, the faster you run in investing.
The stiller you stand, the faster you run. Okay.
Yeah.
So can you explain a little bit more for some of our audience that may not really catch that? So the more still you are, the faster you run.
Yeah.
Essentially in investment.
Correct.
Okay.
So I think end of the day, I think the beauty of this invention of the stock market is that you actually have your talented CEOs, right? People like, for example, if you invest in Tesla, you have Elon Musk, right? If you invest into, for example, Facebook, you have Mark Zuckerberg working 24/7 for you, right? These are people who are highly committed, running billion-dollar companies. And, a lot of people don't realize that. So they feel that, in life, to earn money, to compound money, I have to do something very actively. Otherwise, I feel that I'm not putting enough effort to get those results.
Okay.
But once you start seeing yourself as a business owner and people are actually working for you, right? And you don't need to do much, right? And that is where really compounding will start working in your favor.
Okay. Yeah. So in a sense, you're sharing with us and the audience as well that really is to have that conviction and in a sense, that trust in the companies that you have invested in and let them do the work in a sense.
Yes, and of course not blind trust. So we do our own due diligence, look at the fundamentals, the earnings, the track record, and if that's good, then we just let our founders do the execution for us.
Okay, that's very good. Okay, we're going to move on to another question now, John. The question would be Unity as a case study, and can you tell us why? Why is it compelling?
Unity as a Unity 3D. Okay, so I think Unity is an upcoming company. In fact, I cover it on my YouTube channel. I think that in the future, VR is going to be something that we have to incorporate in our lives, right? So initially, I was very skeptical because we always have this argument of, will VR take over our lives, and will we start living in a VR world? This is something that a lot of people do not want.
Yes.
But I try to keep an open mind as an investor, and I'm very hands-on. So what I did was I actually bought VR goggles by Facebook, Oculus. And when I tried it, I was like, wow, it's like really
life-changing.
It is amazing. Not in a way where I like the games or anything, but I was just trying out some of the productivity tools. Right? So I can actually put on my VR goggles, and I can have multiple screens in VR. Right? So think of it. I think in the future, companies that they are producing computer monitors, they'll go out of business. Right? Because why would you want to, buy all this equipment that's heavy and to fix them when you just put on maybe a glasses next time? It wouldn't be goggles anymore. It would be as light as your glasses, and you can actually design how many screens you have, and you can have multiple screens. It's very productive. And the scary thing is when I wanted to type, right? They actually have this virtual keyboard.
No, get out of here. Really?
Really. And the cameras are able to detect where your fingers are, and you can literally type in the air, and your words will come out, right? So I think keyboard companies also go bust in the future, right? So I think it will not be I think it's quite unrealistic to think that everyone will just go into VR world like a Ready Player One, like in the Ready Player One movie. But I think there'll be a mix, right?
There'll be a shift.
Yeah, so just for myself as a young person, I think in the future, my living hall will be like this studio where it's white. And then I'll just don my VR glasses and I'll just watch like a cinema. I'll just teleport into a cinema setting and I'll watch my movie.
And meet your friends in the metaverse.
Exactly. So I don't need monitor screens anymore. I don't need TV screens anymore. And I don't need a furniture in my living hall except like a sofa.
You're looking at the next future tech genius here in Singapore. You can forget about Elon Musk and Mark Zuckerberg. Anyway, time has caught up with us. It's been a pleasure having you once again, John. Any final words in 5 seconds to our audience? I want to share some resources for the audience.
Okay, sure. For the audience.
Tell us what it is.
So I want to bring up my slides and share with everyone. So just be ready to take a screenshot of the QR. So I share my investment research freely on my YouTube channel. And because I see that you have committed your time on the weekend, I also want to bring up my game as well by committing to you, by giving you a gift. Right? So this is actually an investing guide, and it's free for the first 100 people who download it. So just screenshot this, go to the QR code and get the resources that we have for you. Right? So good luck to your investing journey.
Thank you so much, John. Okay, now we're going to move on to our very next segment, also talking about value investing, the mindset game. Okay, this man is no stranger to the spotlight. His name is Kelvin Sito, founder and managing director, also from 10X Capital. So stay tuned.
All right, welcome back, everyone. It's so exciting. So all of you have actually learned from Jonathan, and for me, I'll actually continue from there to guide all of you to learn how you can become a growth investor. But first and foremost, I just want to thank Tiger Brokers for organizing such a great event for all of us over here. And anything securities or stocks that I mentioned is just for educational purposes only and not for investment recommendations. All right. So the title for this morning is How Can You Become a Growth Investor? So for that to happen, there are actually 4 topics that I have for all of you. Right. First topic is actually the introduction. All right, and the second topic is, okay, so what I will have is, number 1 is the introduction. Second is that I will share with you some case studies I have, and also talk to all of you about the importance of having conviction, all right? So that's on the slides right now. So let's head on to give all of you a quick introduction about myself. So my name is Calvin, and I'm actually a portfolio manager of multiple 7 figures portfolio, and right now I'm a full-time private investor with almost 9 years of investing experiences. And right now I'm also a founder of Growth Investing Mastery, which is the Asia's largest growth investing community. So we have a lot of people from different nationalities: Malaysia, Singapore, Thailand, and sometimes we even have customers from UK and United States as well. So moving on, right? What I want to share with all of you is that growing up, I always knew that money was very important, because without money, there's not many things you can do in life. But with a lot of money, right, or with just a bit of money in life, you have more options, right? How many of you agree that money is very important? Just type money is important in the chat box. So from a very young age, I understood that concept, which is why at a young age, when I was studying business in Temasek Polytechnic, I actually started to take on different jobs. I started to learn investing on my own. I even have paid meals, like lunches, dinners with established investors around the region, so that I can actually learn from them. As a result of that, at the age of 23, I've actually obtained a small success for myself, which is a $500,000 portfolio. But I would say growing up, I sort of sacrificed a lot of my teenage growing up years, but I think it's still kind of worth it. After attaining a bit of success, it's very important to give back to the community. So which is why today I coach a lot of individuals like yourself, many executives, young adults, on the importance of investing, because all of us face the same thing, right? In life, there's rising costs, housing gets more expensive, even food costs gets more expensive, and we really need to invest to actually beat inflation and the cost of living. Sometimes I also get interviewed by people around the region in Southeast Asia and United States as well on the concept of investing and my own personal investment philosophy. I also get invited by universities, because occasionally they have business case study, and I get invited back as a judge so that I can assist some of the students in perfecting their analysis of companies. I also have a book that I published 2 years ago. We have podcasts and blog. And so these are free resources that all of you can tap in to actually learn investing and accelerate your journey much faster. I also did an experiment for myself and also for many of people over there, because a lot of people think that investing is very difficult. There's a lot of concepts you have to learn. But I would say that investing can be kept simple. And I've used this experiment. I started a new portfolio and I call it Hedgehog Portfolio. And I blog about it consistently to demonstrate the growth and the progress over the last few years. So you can see, started with 200K, but gradually it moved up to 1.1 million. So this is a community that we have here. But after all, today is not about me, it's about all of you. And if you are tuning in right now, I want you to sit up, I want you to get ready to actually write down some notes, because I'll be sharing a lot of useful tips for all of you. So let's head on to the key thing of this morning, right, is the growth investing framework. So I want to ask all of you today, right, if you have 2 companies, company A and company B, they are the same company operating in the same industry, but company A is growing at 15% and company B is growing at 5%. Given a choice, which company would you buy? Just type company A or company B in the chat box, all right? So those first few who will participate, you actually get some Tiger coins, all right? So quickly just type in the chat box, all right? So some answers are streaming in, and I'll let all of you know that the answer is company A. Because isn't it straightforward, right? A company that's growing much faster will actually become more valuable over time. And when it becomes more valuable, the share price will increase and you'll start to make more profits buying into those high growth companies. So I want to share with you, so I chart out this corporate life cycle. You can see company when they first started, and then they start growing, and then they start maturing. So there are a few pointers that I want to highlight to all of you, right? So growth companies, they tend to be in a maturity stage, decline stage. Value stocks, they tend to be also in a maturity stage. But what we look at today is what I call super stocks. Super stocks is another term for growth companies, right? So when we buy growth companies, we can be assured that our portfolio can grow much faster over time. So let's define what are super stocks, all right? So super stocks are businesses that are growing more than 30% in revenue every year, all right? Second, it must have a unique and highly differentiated product that's very difficult to replicate. Think about Tesla, right? Think about the kind of data that they have right now. Is it easy for someone to compete with the Tesla? Just type yes or type no in the chat box, all right? So every company that we buy, there must be something that's really unique about them that makes it very hard for competitors to compete with them. And thirdly, the business must be well managed. And lastly, there must be a secular tailwind underpinning the business. So when I talk about tailwinds, what am I referring to? Today, there are sunrise industries. There are also sunset industries. So what are some sunrise industries? You talk about electric vehicles. You talk about digital businesses. Talk about software, right? Talk about fintech. These are sunrise industry. Going forward, these are the industries that will continue to grow at very high rates, right? Every single year. And they are a long runway for the growth to happen. Whereas for sunset industries are like your, maybe newspaper businesses, maybe your calculator businesses, and these are the businesses that you should avoid at all costs, right? So don't invest in sunset industries, but invest in sunrise industries. So type sunrise in the chat box, all right? So I want to share with all of you this company, right? StarHub, I think it's no strangers to those who are living in Singapore. It's a telecommunication business. Competes with Singtel, M1, MyRepublic, and Circus Life as well. So I want all of you to make a guess, right? What do you think is the share price performance of StarHub over the last 5 years? Is it an uptrend, sideways, or is it a downtrend? All right, just type it in the chat box, okay? So I'm going to give all of you a few seconds to type it in. All right, uptrend, sideways, or downtrend, okay? So right now, I'll review the answer to all of you. It has actually gone down quite badly over the last 5 years. But it is no surprise because we have too many competitors in Singapore and there's only a limited amount of customers. Then let's move on to another company that I think some of us may be very familiar with. Is Singapore Press Holdings. All right, Singapore Press Holdings publishes newspapers, but today, where do you consume your news from? Is it buying newspaper or is it from online, from internet website? So type newspaper or type internet, okay? And because of that, all of us could really understand and see how Singapore Press Holdings got disrupted so badly. And as a result, the share price have actually went down as well. So these are the companies that you really want to avoid. But whereas, there are a few group of companies that I want you to start seriously paying attention to, right? So I want to borrow a quote from David Gardner, who is the founder of Motley Fool. He says this: make your portfolio reflect the best vision for our future. So think about it today. How will the world change 5 years from now, 10 years from now? Will we have more internet businesses or will we have lesser internet businesses, right? So at every change of an era, there will be a new transformation. And right now we are heading towards the digital transformation. So which is why companies like Tesla, companies like Salesforce, companies like C Limited, all kinds of internet businesses, they'll start to thrive and start to do very well, okay? Because more and more of us, we are spending our time on the internet. So I want to share with you an example of this company called Salesforce. So Salesforce is a customer relationship management software. It helps companies to actually generate more revenue by targeting potential clients to attract and actually to close deals as well. So take a look at the chart below, right? You can see that the revenue has been growing really, really well, right? So this is what I consider a super stock. And as a result, the share price have actually done tremendously well over the last 5, 6, or even a decade. So you can see over here, from 2006 all the way to 2021, the company have actually gone up by 31 times. So this is not 31%, but it's 31 times. So just imagine if you are well positioned, your portfolio is well positioned into buying all these digital internet businesses that are mission critical, right? I think your portfolio will do better. And second, maybe I'll talk about this company called C Limited. It runs Shopee, a name that's very familiar with all of us. So I just want to do a poll for all of you right now. Which e-commerce platform do you prefer? Just if you prefer Lazada, go ahead and type Lazada. If you prefer Shopee, go ahead and type Shopee as well. And remember, as you participate, you start to also get a chance to win Tiger Brokers coins as well. So you can see is actually a fast-growing company. And I want all of you to make a guess. Over the last 5 years, what is C's share price movements like? Is it uptrend, downtrend, or is it sideways? Type in the chat box once again, all right? Uptrend, downtrend, or sideways, all right? Okay, 3 more seconds. And I'll review the answer to all of you. You can see that from 2017 all the way to 2021, it has gone up by 16 times, right? So all of us have choices in life, and we have choices for our portfolio. Do you want to buy companies that are not growing, or do you want to buy companies that are growing? And our choices today and the way how we position our portfolio will affect our returns and will affect how soon we can actually achieve our version of financial wealth, all right? Another company I want to highlight today is this company called Tesla. I think all of us can see very clearly it has grown really well over the last 5, 6, 7 years. And likewise, the share price have actually reflected that reality. But guess what? Today, if you imagine the number of electrical vehicles in terms of penetration of total vehicles, it is still at a very, very low percentage, right? I would say it's not even 30%, not even 20%. It's still very, very low. So just think about the amount of runway of growth that's left for companies like Tesla, like Is Limited, and Salesforce as well, right? These are the future, which is why you've got to buy into companies that are disruptive, innovative, that reflect the version of the future that you believe in, all right? So I want to share with you a company called Is Limited. It is a company that I personally vested, and personally, I have a lot of conviction in as well. So let's talk about Is Limited, right? It has Garena, which is a digital arm. It's a digital entertainment arm, which is run games like Free Fire. We have Shopee, which is an e-commerce company. We have C-Money, which is a fintech mobile digital wallet. So talk about the scale of the business, right? So over here, you have 730 million quarterly active user. We have a 56 billion gross merchandise value, which refers to the total amount of transaction on the platform itself, and the payment volume is about 15 billion itself. So we look at the digital entertainment business in terms of gross margin, right? It's about 71%. So I want to ask all of you today, right? Is the digital entertainment business very profitable or not profitable? Just type in the chat box, okay? Very profitable or not profitable, all right? So you can see that it's consistently very stable. In fact, it has been rising a little bit over the past 2 to 3 years. And so this is what I mean, right? When we buy companies, we have to buy companies that are very profitable, that generates a lot of cash flow for you, right? So that it can become more valuable over time. And now let's take a look at the rankings. Today, Garena is all the way on the right side. It generates about $1.1 billion in year 2021. And look at PUBG is generating $2.8 billion. So you can see that Garena has still many ways to grow, right? Imagine from 1.1, if you grow to 2 billion or even more. These are the kind of runways that we can expect, in Is Limited. And also, what's really interesting is that I would say Garena is really intelligent. Their main game is called Free Fire, and Free Fire has been collaborating with a lot of people in the pop culture. So Street Fighter, they have collaborated with them. So some of the Street Fighter characters, you can play those characters in Free Fire, Cristiano Ronaldo, and Money Heist as well. So they actually extend the appeal to different segments of the world population, right? So it's slowly becoming a global game. Now, I want to talk about Shopee. It's starting to be very internationalized. Some of us may think, hey, Shopee is just in Singapore, but it's not true because they are in Southeast Asia, Latin America, and recently in India and Eastern Europe as well. So I talk about this, right? So this is a chart showing which company is doing really well in different countries. So you can see countries in Indonesia, Vietnam, Singapore, Philippines, Thailand, Malaysia. Shopee, is getting a lot of traction against their competitors, such as Lazada, eBay, and other competitors as well. Now, look at Shopee itself, the business. I think it started in 2015 with only 10 million in revenue, but today it's 3.7 billion. It's a very fast-growing company, right? So this is how you want to position yourself. Buying fast-growing company that is of quality, that's winning against their competitors. Now, let's move on. So see money as well, the users are growing rapidly. It's really a beautiful chart. So usually when we buy companies, we want to buy companies that has improving fundamentals, right? Year on year, it has to report growth. It has to report higher profitability as well. And I want to share with you that all of us will think that, hey, Shopee could be just a Southeast Asia play on e-commerce. But things are starting to change drastically over the course of last year. Shopee have entered Latin America, which is, in terms of addressable market, the population size, I think is way larger than Southeast Asia. They've also went into Eastern Europe with Poland as well. So that's very interesting. And recently in India as well. So think about it, right? You have a business, an e-commerce company that is actually a globalized business and is succeeding really well in different markets. And imagine if you think about e-commerce as the way to go moving forward, then I think Shopee could be a proxy to that, right? For you to benefit from such strong tailwinds around the world. So we met a management. His name is called Forrest Lee. He's actually a Singaporean residing in Singapore as well. We also met Fred Liu, which invests in C. Fred comes from Hayden Capital, is based in New York. So the part of how we do our due diligence is meeting the management team and meeting other notable investors who are investors in the same company as us as well. Now, we actually shared this company in 26 November 2019, and since then, the company has done really, really well. So just to give you some context, right? If we were to compare C Limited with S&P 500, which is the normal market returns, right, as a proxy for market returns, I want to share with you what is the remarkable difference between investing in C Limited and S&P 500, all right? So, C Limited, if you would invest $10,000, it would turn into $140,000 in 5 years, right? Whereas for S&P, if you invest $10,000, it will become $20,000 in 5 years. So again, how you grow your capital is really a conscious decision. And whether you're going to retire earlier, whether you're going to obtain your version of financial freedom, is really how we are investing today. And I would say investing in growth companies is one of the quickest way and one of the simplest way for all of us to actually grow our investment portfolios faster. Now, and because of that, I just want to share with you, this is the conviction I have. This is the amount of capital I've deployed. And this is where we stand, okay? Now, moving on, I also want to highlight this thing because all of us are, have experienced volatility in the stock market where prices go up, go down, and I think, I feel all of you, I think the last few weeks hasn't been quite nice in terms of what has happened in the stock market. So, which is why I thought about what I want to share this morning to all of you. And I want to share this concept called conviction, all right? Please type conviction in the chat box as well, okay? So I want to share with you something. I think in year 2020, it was a freak year. I think a lot of us saw S&P 500 fell by 30%, and that was really scary. A lot of us were selling stocks, but some of us were actually buying stocks. So when you see such a huge decline, almost 32% in February 2020, would you have sold your stock over here? What we realized later on, the same year where S&P 500 dropped by 30%, it ended the year on a positive note. It actually was positive 16%. So I just want to share with you that volatility is something that is normal in the stock market. It's a feature, it's not a bug. And when things are volatile, it becomes even more important why we are investing in certain companies. We must know the reasons why. We must know why we own it and what are its prospects moving forward. Okay? So this chart, I just want to share with you a little fun fact, all right, to assure all of you that volatility is not something to be afraid of. Okay? So we go back all the way to 1980, all right? So that's a long time. I wasn't even born back then yet, all right? S&P 500, which is the American stock index, within a year, right? It fell almost 13%, 13.9% on average, right? But even though it fell 30.9% on average during the year, it ended the year positive, right? Positive in 29 years out of 39 years. So what this means is that despite all the volatility that we are seeing today, we have data and history to back us up, to let us know that data is on our side, that the market tendency is that it will end on a positive note instead of a negative note. On some years, because of we have a recession or some other noise, market may end up lower, but in most cases, market ends on a positive note. Okay? And And I also want to share with you something really interesting. This is Monster Beverage. Maybe some of you have drank the company before. Drank the product from the company before, right? Just type yes in the chat box. So I want to share with you what it means by this word called drawdown, right? So drawdown is very simple. It means how much the stock price has fell from the highest point. So all the way in 2006, the stock has fell by 80%. In 2000, the stock has fell by 30-40%. In 2008, 2009, there was the financial crisis. It was very painful. The stock fell by 70%. In 2012, 2013, the stock fell by 40% as well. These are very painful drawdowns. And for any investor who have bought this stock and seen your stock drop by 30-40%, it's really hard for you to sell. It's very hard for you to hold on to those companies, right? But if you know exactly what you're buying, just like what Jonathan said, if you are tracking the right things referring to the fundamentals, the sales, the profits, you would have held on. And if you would have held on, what is the kind of returns that you will likely get today? Well, I don't want to surprise all of you with this result. Monster Beverage, if you held it from 2004 all the way to 2021, you will have made 150 times your money, all right? This is not 150%, but it's 150 times. So you can see that despite all these drawdowns, Monster Beverage still continue to perform really well because investors are actually looking at the profits, the revenues, and I think sometimes share price volatility could be a distraction. Now, I want to share with you another company called Apple. Apple is not an uncommon name. All of us are very familiar. Some of us may be using iPhone to be watching this presentation right now. Apple have similarly had its drawdowns, but yet Apple continued to power ahead because of its growing sales, growing profits as well. From 2005 to 2021 has gone up by 62 times itself, right? So you can see that, today some of you, maybe your portfolio could be down because of short-term volatility. This is not permanent, right? But what you should be worried about is that if your company's, the profitability starts dropping, the revenue starts dropping, the sales start dropping, I think that's a serious concern. But if your share price, swing around, drop by 20-30%, I can just share with you this is normal, and I want you to tell yourself that this is normal. Don't be frightened by it. Don't be shaken out of it. The worst thing you can do for yourself is to sell a fast-growing company because the share price have just went down by 20-30%. That doesn't make sense, all right? So I want to summarize my presentation to all of you in just one simple thing, right? Know what you own, know why you own it. So if you look at your current portfolio today, are they fast-growing, right? Do you know the reasons why you're buying it? Because if you're buying it because of some hearsay, then when the stock price drops a lot, I think it's going to be very hard for you to be convinced of your companies. But if you have done your research, you understand the reasons why you're buying those companies, then I think it's easier for you to hold on to those companies. And the third point that I want to share with all of you is focus lesser on share price movements. I know it's not easy, right? Because when I first started out, it was really hard. When I see my portfolio went down by 20-30%, it was really hard. It was very painful. And I asked myself if I made a bad mistake. But as time progresses, right, my portfolio, the companies in my portfolio started to improve their results in sales, in profitability. The share price actually went up, recovered, and make new highs again. So really, to be a good investor for the long term is pay more attention on the fundamentals and pay lesser attention on the share price. And I want to sum up by saying this. Without conviction, it is very hard to succeed in the investing world. But if you know what you own, you know the reasons why you own it, and you are not shaken by volatility, long-term wise, I really believe that you'll do very, very well. All right? So before I want to end, I just want to share with you, we have a special bonus for all of you. We have prepared this ebook that's available for downloads, but we want to reward those who are actually taking action quickly. So right now, you can take a screenshot of this, right, and take a picture of the QR code or scan the QR code. You'll be entitled to this ebook. Download it, and I think this is going to help you in your journey a lot. So with that, thank you so much, and once again, I'd like to invite Mark back up on stage.
Such a joy. It makes me so happy when people invite me. Thank you for having me. Ladies and gentlemen, if you like whatever Kelvin shared with us, just put a thumbs up in the comment section. You know what, Kelvin? There are a lot of questions. I realized for yesterday and today, the question segment, I have not read out the username, but we're going to do things a little bit different here. for whatever question that I'm going to be sharing from the audience, we're going to share a username as well, okay? So, Kelvin, you ready?
Awesome, let's go.
Okay, this question is from KY Relia, okay? How do you suggest we allocate capital for buying the dip? This question was asked actually earlier at John's segment, but because you all are the co-founders for the same company, I think you can answer too.
All right, sure. By the way, thank you so much, everyone, for submitting your questions. It really gets allows us to understand what's on the minds of all of you. So I think allocating capital is really important. I think whenever we buy stocks, we never want to go all in because we understood that market can be very volatile and there will always be buying opportunities. So the way I look at it is that we will always take a small bite in everything, right? Because I think some of us, when we allocate capital all at once, and now the market have dipped so badly, we'll feel helpless, right? Like we have no money to start investing. I think it's going to be really very difficult. So I think the way we look at it is market timing is very difficult. I think that's one thing that we must recognize. And I think early on as an investor, I always start to fantasize like, oh, maybe I have a crystal ball. I can tell how the market timing goes. Like, you know, maybe I should buy today. Maybe I should buy next week. You know, but I found that was nothing but just a simple fantasy. So what I did differently today is that I went to understand the valuations of the companies that I'm buying in, right? So as long as I'm buying it at a fair, undervalued price, I'm happy because at the end of the day, it's just like buying a property. As long as you buy it at a fair price, yes, I think you'll be happy. And after buying a property, you don't see the transactions every day. And because if you are really believing in the long-term prospects, I think the market can be very volatile in the short term, but it should not cause a lot of worries because once again, I will go back to saying the same thing. There's no perfection in terms of market precision. So over time, it seems like market timing works, but in the long term, if you look at the top 10 investors in the world, they have made money buying the right companies instead of doing market timing. So when I talk about allocating capital, I really, really believe in my heart that if companies, as long as they are performing very well and you are buying them at a fair price or undervalued price, I think they are good, right? But if you are buying a lousy company, even you buy a lousy company at an undervalued price, you may not make money because that company's valuation may drop over time.
I hear you. Okay, so KY Reader, we hope we've answered your question. In a sense, really it's about the conviction of the company and the track record.
Yes, exactly.
Essentially, is exactly also what his fellow founder of 10x Capital shared. You know, the conviction in the company, the track record in the past few years.
Yes.
That will help you decide. Okay, next question. This one is from two people in our audience, Wise Python and when Lambo69 asked, what's your feedback and opinion on Grab? 1 minute on this.
All right, so I think Grab is a wonderful company. It's brought a lot of convenience, accessibility, and I think whenever you go to any restaurant, you could see a lot of Grab over there. So a huge respect to all the Grab delivery riders.
Yes.
But I think when we look at the business in itself, today, we do see some headwinds, right? Because for them, they are charging a certain commission for facilitating certain transactions. And I think merchants are, this is my personal experience. Some of the merchants are complaining that
more can be done for them.
More can be done for them, and the commission, they want it to be reduced.
I hear you.
And to me, and to many investors that I spoke to, they do feel that Grab's product seems to be a bit commoditized, and there's new competitors can come in to compete with them as long as they have capital. So with that regards, I think it's still very early, but I would say we will monitor and take a closer look. But for now, Grab is still loss-making, and we would like to see the financials to be improving.
Bounce back a little bit better.
Yeah, because a company can be loss-making in the early stage, but as it scales, we want to see a very clear path to profitability, right? Because otherwise, a company will always require external financing to keep it alive, and if that's the case, then the investment could be viewed as a bit risky.
Yes, I hear you. Okay, so for Wise Python and when Lambo69, we hope Kelvin has answered your question. In a sense, it's really, again, monitor the track record. Just hold on, be still, like what your fellow colleague mentioned, be still, and just trust in that research you have done and the conviction that you have.
Yes, correct.
Okay, next question. Wow, the questions are just coming in non-stop. You can see from our live feed.
Yes.
By Steve Mus. Okay, does it matter, Kelvin, that C Limited shows a loss? Does it matter?
All right, so this is a great question, Steve. So I don't answer that.
Your eyes just sparkled.
Yes, because this is a company that I'm very familiar with. I've actually in February we're going to meet the CEO once again because we have a shareholders meeting. Okay, so very simple, right? C has several components to the business, different business segment. So right now, what is creating the loss is the Shopee e-commerce unit. Garena is very profitable. They are earning more than 50% margin. That's crazy, right? A business don't earn such a high margin. Even an F&B restaurant just probably earn about 8%. But Garena is earning 50%. So whatever money that Garena is earning, they are deploying their capital into Shopee so that it allows Shopee to expand quickly. So what I want to say today is that after certain conversations with the management, it became very clear that if Shopee wants to be profitable overnight, they could do it. Because right now, the loss per order is about 41 cents US, it's like 41 cents in US dollar, right? So which means if they increase their take rates a little bit, which means their commission rate. So if let's say you're a merchant, right, and you get to sell an item on the Shopee platform, and Shopee is charging you 2%, that means they are taking 2% of the transaction value, right? So what I can say is that there's a fundamental difference between Grab and Shopee. Grab is charging maybe for the food, I believe it's 25 to 30% commission.
Yeah.
Shopee today is about 2%, 3, 4, 5%. It's still very, very low. So if they want to be profitable, they can. But today, I think Shopee is sacrificing immediate profitability for market expansion. So I think there's a fundamental difference, which is why what I prefer as an investor is buying companies who have clear path to profitability and can be profitable anytime if they wish to.
Okay, we hear you. Thank you for that. We hope we've answered your question. Steve Mus, and yes, whatever he advised, again, this is his personal opinion on it. The difference between Grab and Shopee, that's his. Okay, we're going to move on to the next question. We are running out of time now, so very quickly, Kelvin, just 1 minute. This question by Dragon Lady. What is a good amount to start for beginners?
All right.
It's a very legit question.
All right. Hi, Dragon Lady. Okay, so that's a great question. I think when I first started, I always thought, hey, I need a huge amount of capital. But I want to let you know personally, when I started, I spent, my first initial capital was $1,600. Back then, the brokerage fees were still relatively quite high, so I had to start with a bigger amount. But today, I think you can start with as low as maybe $30 US or even lesser, because I know Tiger Brokers actually offers very competitive brokerage fees. So what I can say is that if you are investing in the US market, we can actually just buy one share, right? So if you want to buy one share of, for example, right, C Limited, just $200. If you want to buy one share of Skechers, which is the shoe company, I think it's less than $40. So what's important today is to start early, right? Because all of us know of this idea called compounding. Compounding is such that when you start early, it's much better. And don't ever let this idea that, hey, if you don't have huge capital, you can never start, right? I started very early, and I believe those of you who are young, you should start right now as well. Because when you start early, you actually obtain experiences that can guide you better. And I always say this, right? I'm very glad that I started early because I made some painful lessons. It cost me some money, and I've learned it earlier, right? But if I were to manage millions of dollars and make the same mistake, I will look like an idiot, and it's going to be a lot more painful. So my short answer is that if you have less than $100, Sing dollars or US dollar, there's no excuse why you should not start. And I would really highly encourage you to get started, to accumulate as much knowledge as possible, so that as you get out there, as you start working, you have a bigger amount of capital, you will be a competent investor and you'll start making more money. So never let capital be an issue to prevent you from starting investing.
All right, thank you so much, Kelvin. We've come to the end of our segment. Indeed, you heard it from the capital men themselves, 10x Capital. Kelvin Sito, thank you so much for taking time to join us. And indeed, right now, we still got some questions. Unfortunately, we don't have the time to answer them. We're going to go for a short intermission. I'm going to talk to you about the Experience Store very shortly. And after that, we've got another one last segment about the fundamentals of investing. And we're going to be talking about estate planning, a necessity in your financial plan. Okay, so very quickly now, we're going to turn our eyes to what's happening at our experience store. And there we go. Once again, it's from yesterday and today, okay, all the way to 8 p.m. Last entry at 7:30 p.m., all right, guys? It's happening at Tiong Bahru, 7 Yong Siak Street, okay? And here's the thing. There's a claw machine there that gives out amazing prizes. These are the prizes here. These are commission-free vouchers, $50 to $100 stock vouchers, 888 Tiger coins. Because why? This is the year of the Tiger. And we at Tiger Brokers, we bring Chinese New Year early for you. Okay? And we got limited edition, of course, Tiger Brokers, merchandise, and Apple AirTag. Okay? Here are some participating outlets around the area for our audience that are not in Singapore. Next time, if you visit us, Tiong Bahru is the area for cafe hopping. These are some of the cafes here, I beg your pardon. Drips Bakery Cafe, Chapter 55, Tien's, and last but not least, Old Shifu Charcoal Porridge, amongst many others. Free coffee, free gelato, 10% off the menu, you know, one free hot drink. So come on down, check it out if you have time for our Singaporean audience. And when you are doing that, there will be tiger dolls around. You can't miss them. They are as big as me, okay? Take a photo with them and you get another chance, all right, at the claw machine to win awesome prizes. Okay, for those of us that are not driving because you're eco-friendly, you know, and you haven't bought your EV yet, okay, very simple. We've got transport covered for you in the form of a shuttle service. Intervals of 30 minutes, all right. These are the details. I'll leave this slide on for a while, okay, 3 seconds for you to take a screenshot, okay, all right. And there we go. Once again, for those of you that have just joined us on the Tiger app, welcome. Today is the last day. Okay, just now I mentioned a lot of freebies and vouchers and whatnot. There are vouchers also online for our audience that may not have the time to come down to the experience store. Okay, this is the last day to open your surprise 8. Okay, on the WWTD landing page. In the meantime, I've done enough talking about the experience store. I will let the video do the talking. So feast your eyes on this experience store video. Hi, once again, welcome back. In the hot seat, we've got John Pan, Senior Director from PFP Financial Advisory Firm. Thank you so much for taking time to come and join us today. Today we're going to be talking about a topic that is very, very close to his heart, and this is estate planning, a necessity in your financial journey. Now, before we continue, John,
Right.
can you just share more about yourself besides your appointment at where you work?
Of course. Hi, everyone. Good morning to you. It's a privilege to be here today. My name is John, and I'm a Senior Director with PFP-FA.
Yeah.
Now, I'm going to take this opportunity to introduce PFP-FA.
Sure, go ahead.
Right, yeah. We are a licensed FA, and we are just 1 year old. We gotten our license last year by MAS, of course. Yeah. So what's the difference between PFP-FA and the other FA? Yeah, we are a estate planning-centric company right, in Singapore. Yeah. But despite the fact that we're only 1 year old, but we have been doing estate planning as a firm since 2016. Yeah, we go way back.
Yeah, that's very long.
So how serious and how committed are we in this business, estate planning? Yeah, is we even have our own legal consultant in the firm, within the firm, to help to facilitate on the will planning, drafting of the wills for our clients, as well as attestations of the will and the LPA. Right.
Okay.
Yeah, so today, my topic is on estate planning. Yeah, so we're going to talk about estate planning. So there's a lot of misconceptions. Estate planning is like, a lot of people will think that, oh, where is the estate that we stay? Yeah, but actually the fact is not true.
It's not really a physical estate, so to speak.
It is not a physical estate.
More than that.
Correct. It's more than that. Okay, so estate meaning to say that when we are alive, whatever we own is called assets. And when we pass away, the assets become estate. Yeah, so that's what estate is all about. All right. So today I'm going to cover the estate planning, which is the necessity in financial planning. So everybody knows financial planning is 3 stages mainly. Yeah, we protect our wealth, right, for income replacements, and then we are young. We started off, we wanted to build wealth, and that's where all the investments comes in. Yeah, like myself, yeah, I did a lot of investments when I was young, and I'm still doing investment right now. Yeah, correct. But the thing is, there's this saying in estate planning that the best investments that we make sometimes might be the worst financial plan. Yeah, why is that so? Let's use myself as an example. You know, when I do investments, I have investments overseas as well. I believe many of the viewers here have investments investing in overseas shares.
Yes.
Yeah, but however, do you know what's going to happen to all your assets that you built if something should happen to us? Like if something should happen to me, what is the assets that I created? Yeah, overseas and in Singapore. Yeah.
Where does it go?
Where will my family be receiving them, and how would I want it to be distributed to them? So estate planning, we're going to discuss today, is how we preserve our wealth and how we distribute out to the family member in the manner that we want it. Yeah, but before we move on further, this will be a disclaimer. So whatever I mentioned today doesn't necessarily represent my firm. All right.
Okay. All right. So you mentioned a lot about estate planning, John, and the importance of planning ahead, and that it's not just an accumulation of wealth for yourself, but what happens in the case of passing on, in a sense? Where does it go?
Right.
More importantly, how do our loved ones, the people we intended it for, how do they receive it? Right. So I believe that ties in very quickly then to the will writing.
Of course.
And how important is it in estate planning?
Okay, a lot of people, wills is only a tool. So a lot of people will look at wills like something like a taboo,
Yeah.
Like, you know,
and don't write because because it means you are going to pass on soon, is it?
Exactly. Okay, but will is only a tool. Yeah, it's allow us to express or to continue to communicate with our loved one when we are no longer around. The message that we want to pass to our loved one, when we are no longer around. So when it comes to estate planning, I'm going to show you what are the things that we will need to take note of. All right, first and foremost, the assets that we acquired. Okay, looking at the slides here, we have on the 3 circles that you have seen. Yeah, so it largely summarizes the estate or the assets that we own. Okay, with investments and properties, followed by business, as well as the next one would be cash and cash equivalents. So cash, everybody knows, the savings in the bank, deposit is cash. But cash equivalents, such as, actually your CPF is cash equivalents. As well as the insurance proceeds is also the cash equivalents. All right. So when we pass on, okay, all our assets that we accumulate, will goes into this funnel. the clicker.
Let's give it a whirl.
Oh, right. Great. Okay, it goes into this funnel. Yeah, that form our total estate. Yeah. So that's why you see the assets become the estate. Yeah. And then when the estate, we want it to give it to our beneficiaries. So beneficiaries mainly would be our family members, our loved ones. Yeah. And nowadays, philanthropy is something new.
Philanthropy, yes.
Yes, correct. So I have seen clients, that they do up their will, and they actually gave out a large part of their assets, to charity organizations. Yeah. But little do we know that there is this thing called the law of distributions. Before we can actually give it to our beneficiaries. So what is the law of distributions? Because before this, Mark told me that we do it casual, simple.
Yes.
So we actually simplify the slides for easy understanding.
Yes.
Because normally estate planning is a very heavy topic. And it's very complex. So I'm trying my best to deliver it in a very simple way. So the layman, everyone can understand the importance of drafting the estate plan. All right, so what is the law of distributions? Now, mainly two areas. So when a person passes away without a will, is considered died intestate. So when a person died intestate, the administrator appointed by the court will have to apply the letter of administrations. Okay, and then it will distribute according to this thing called the Intestate Succession Act. Okay, which is governed by the law. Okay, so for somebody who draft a will, like myself, I done my will. Touch wood, if I pass on, I deem to die testate. So when I die testate, in my will, I already appointed my executors. The one will be executing my will for me. So my executors will have to apply this called the grant of probate. To put it simple, the letter of administrations, the grant of probate, we call it court order. Because this has got to be obtained from the court. It's called a court order. Okay, and then it will be distributed according to my will. How I want it to be distributed. How I wanted to give up and who do I want to give it to. Okay, but however, if for someone who didn't draft a will, didn't express, okay, in the legal format, in the legal way, and the person passed on, what's going to happen is that the assets will be distributed by the government law. So let me quickly show you, what is Intestate Succession Act. Okay, so you can see here on the left-hand side, when a person passes on the left-hand side will be the survival. The person, the family members who survive us. And on the right-hand side will be the entitlement. Okay, so
maybe for the audience, just stop you there for a while, John.
Sure.
If they want to take a screenshot of this, feel free to. And then any other questions right now for the audience, if you want to ask, feel free to. Once again, this may seem like a heavy topic, but it's not really, because at the end of the day, what we do today is really for tomorrow. Right? Like the theme of today is investing tomorrow, today. But we cannot just invest assuming that we will have we do not know what the future holds, right? Back in 2019, in mid-2019, we didn't know COVID would hit, right? But look where we are now. So the idea behind this topic, I think, is a topic that many of us actually don't really talk about. Maybe because of taboo or, the culture.
Right, exactly.
But I think this is an important topic, and we are so privileged to have you today to share more. So once again, audience, if you have any questions, share with us, and we will ask your questions to no better than the right person to ask here, John Pan. Okay?
Okay, so looking at the Intestate Succession Act, maybe I can share some of the experience, which is the most common group of clients that we usually handle. So if you see here, for a person who passed away, normally is survived by the third row. You see is parents, spouse, and issue. Okay, issue here means, very interestingly, issue here means children. It's a legal term.
We are all issues.
We are issues. Okay, it's a legal term. So meaning to say that parents, spouse, and issues. So when a person passed on, leaving behind the parents, spouse, and the kids. If you look at the entitlement, the parents receive nothing. 50% of the estate will go to the spouse, and the remaining 50% will go to the kids in equal share. But however, according to the Singapore law, if the kids, the beneficiaries, is not of legal age, meaning to say 21 years old and below, they cannot inherit directly. Therefore, sureties, okay, if there's no will, sureties will be appointed. to hold on to the funds. And the funds can only be released to them, at the age of 21. Yeah, so that's where we, the clients, start to ponder, at the age of 21, is it the best age to inherit a lump sum of money? Can young adults at the age of 21 know how to manage a pool of funds? But however, if you're going to draft a will, we can actually dictate, how old the assets can be distributed to the beneficiaries.
Down to the detail.
Down to the detail. And that's what we call a testamentary trust. I'll come to that later on. Okay, so now we move on from here. All right. So there's a few things that I hope that you can take note of, which is we call it terminology in the will. So what you'll be able to see. All right. First and foremost is the testator. So the one who is drafting the will, like myself, like you're going to do my will, I'm the testator. Okay. So executors is what we deem as a VIP. Okay, because executors is the one who represent the will and your entire estate. So that's where I will appoint my executors to execute my will for me if I pass on, the most suitable person. And the law allows up to 4 for the probate and the letter administrations. Okay, can grant up to 4 persons. So normally, we will encourage our clients to look into backup executors. Okay, why so? Because let's say, for example, I can appoint my wife to be my executors. So if I pass on, my wife will be the one executing the will for me. But however, we travel quite a fair bit pre-COVID. Almost on a monthly basis. So because she flies for work, so I flies around with her at times. So what if it's a common disaster, meaning to say if both husband and wife passes on, it's called common disaster. So in the event of common disaster, who is the backup executors? Who is the next in line that can actually help you to execute your will? Okay, so other than executors, what is the next person? Administrator. So administrator, what you see here is like what I mentioned earlier. If a person passes on without a will, the administrator will be appointed. To apply for the letter of administrations. So it's actually a similar role as the executors. It's just that we don't get to choose. All right? Okay, and then we have trustee. Okay, trustee and executors normally are the same person, unless we specifically appoint another person. Okay, but what is the difference between executors and trustee? Yes, correct. Executors is execute your will. To follow your instructions. So, but however, there is a delay gifting, like I mentioned earlier. I can use myself as an example. Okay, I am married without kids. My dad, I'm the only child. My dad is living with dementia. And definitely, he is going to be my beneficiary. But however, if I'm going to give him a lump sum of money, I don't think he can manage because he's having dementia, you see. So in this situation, right, I will have to appoint a trustee in my will. So the amount of money that I wanted to give it to him, will be entrusted to this person, to manage for him, for his daily expenses. Okay, it can be expressed in the will. And likewise, many of the clients with a minor beneficiary with kids below the age of 21, they will require a trustee. Reason is because to continue giving allowance to them, and they do not want them to inherit at the age of 21. So in the will, with a trust, they can actually state, by percentage, disperse out in percentage. So at the age of 25, maybe 20%, at the age of 27, another 20%, the remaining at 35. It can be done in that way, if you have a proper will planned out. All right. So what is next is estate. Like I mentioned, okay, estate is other than where we stay. Estate means to say that when we pass on, our assets become estate. In Chinese, we call our assets is called 财产.
对，财产.
And when we pass on, it's 遗产, so it's estate. All right. So move on to, intestate and testate. Okay, so I mentioned earlier, intestate, that means to say a person passed on without a will is that intestate. And therefore, whatever assets that we accumulated will be distributed by the government. The government will then dictate how and who shall inherit the assets. Okay, beneficiaries. Everybody knows that beneficiaries is like what we all know, that is the one that is going to benefit for our inheritance. All right. So beneficiary, if it's below the age of 21, we call it minor beneficiary. Minor beneficiary will not be able to inherit directly, and therefore a trust will need to be created in the will. If you are drafting a will, a trust is required. And of course, if there's a minor beneficiary, yeah, another very important person, issues is children's lah. Okay, if you have minor issues, minor beneficiary, minor issues, yeah, another important role that is required is the guardian. Now imagine this, if we have a child and if my wife and I pass on, yeah, who is the next guardian to take care of my kids? Yeah, we call it a common disaster. Yeah, and I have one very interesting case to share. I have a client, yeah, when we have this beneficiary discussions, yeah, he actually wanted to appoint the sister to be the guardian. Okay, and because he asked me this question, can I appoint my sister to be the guardian of my child, if my wife and I passes on? I say, of course you can. Yeah, but the reason is my sister is no longer residing in Singapore. He's residing in another country. So can she still be appointed as the guardian? But the answer is yes, she can. But the questions that we should think of is, will your sister come to Singapore to take care of the child?
How effective can she be?
Exactly. Yeah. Or will she be shifting the child to the other country to take care of him? After all this pondering, all this thinking, interestingly, he came back to me about 2 weeks later. You know who he appointed to be the guardian? You can never guess, his neighbor. His neighbor. It's the first case I dealt with, to be honest. I've been doing this for the past 7-8 years. It's the first case I dealt with that he appointed a guardian, outside the family nucleus. Yeah, so I was very curious. I asked him, why are you appointing your neighbor? Yeah, he told me a very simple reason. My neighbor and I, we are very close. My kids and their kids, very close. So he would be the best person, to continue to upbring my child if my wife and I pass on. Yeah, which is something that I have not thought of. Yeah, because we always try to keep within the family nucleus. Yeah, but this actually gave me an insight, a breakthrough, from my planning and all. Yeah, it's not how close your relative is. There's in Chinese, it's called 盐水救不了近火. Yeah, but however,
maybe for our non-Chinese speaking audience, can you share with them that Chinese idiom in English? What does it mean?
远水救不了近火, meaning to say if there's a fire here, you have a pail of water like a mouse away.
It's no use.
It's no use, yes. Yeah, you need time to come over.
Yeah.
Okay. Yeah, so another thing is, in a situation like this, he can actually appoint his sister to be the trustee, to manage the funds, because trustee manage the funds. But the guardian take care of the upbringing of the child. Yeah, so he will actually instruct the trustee to disperse funds to the neighbor to take care of the son if he and the wife pass on. So you see how wonderful this thing is, you see. So a will is not something like a taboo, something is very pantang, But a will is for you to express your intentions, so that your loved one will understand. Yeah, how do you plan for if in the event that we are no longer around? Yeah, because my life goes on for our family members. Yeah, how are they going to be taken care? So that is very important. So next up, I'm going to share with you what is even more important than a will. It's called the lasting power of attorney. We call it LPA. Okay? So what is LPA? We call it in our estate planning term, we call it a living will. A living will. Yeah, because a will, will dictate how we want to give it to our loved one, how we continue to take care of our family members when we pass on. But for LPA, is how we're going to take care of ourselves. Yeah, if we lose mental capacity. Okay, so what is LPA? Okay, very quickly, I'm going to summarize this. LPA is a legal document. Okay, it comes in Form 1 and Form 2. Okay, Form 1 is very structured. Okay, it's like a template. It's more like a template. Okay, but Form 2 is I did like maybe 2 or 3 Form 2s for the clients in my 7-8 years being an estate planner. Yeah, Form 2 is very complex. You can actually plan in depth and give legal instructions, which are legal by. Yeah, like for example, what is the bank account to use to take care of me? Yeah, how to take care of me and how to take care of my family members. So this is like a blank piece of paper that includes all your instructions in. Is called Form 2 LPA. LPA Form 2. Okay, but generally LPA Form 1 is sufficient for majority of us. All right. So other than LPA, Form 1 and Form 2, okay, so what is LPA? Okay, LPA gives authority to appoint a personnel, for someone to act on my behalf if I lose my mental capacity. I'm going to use myself as an example. Okay, so if I'm the one doing the LPA, I'm called the donor. So you're going to appoint Mark, to take care of me if I lose my mental capacity. Mark is my donee. Okay, so normally we will advise the clients, to look into donee 1, donee 2, and even a replacement donee. Okay, so what are the authorities given? Because I give him the authority to take care of me. So what is the areas of authorities that is given? It's categorized in 2 areas, personal welfare and financial affairs. Okay, personal welfare such as my day-to-day care, what I'm supposed to eat, and what is the people that I'm supposed to mix with, as well as the healthcare that is given. And Mark, being my donee, has the power to even restrict, or prevent to putting me into any critical trial or restrict my continuous treatment. So your donee has the power to do that. And for financial affairs, if Mark is being appointed as my financial donee, Mark will be able to handle all my finances for me, including understanding my liabilities, continuous repayments of my loans, my debts, and as well as my day-to-day living expenses. But to be honest, in my personal opinion, LPA is something that is easy to complete, but it's difficult when it comes to executions. Right. So what is it difficult when it comes to executions? Let me touch on how easy can it be completed. Okay, if you're going to do LPA Form 1, you can download the form, fill in all the necessary informations, get your donee to sign, because they have to agree first, they have to sign, okay, and then get a certificate issuer. There's 3 types in Singapore, okay. First and foremost would be the certified GPs, okay, that you can find the list under the OPG, Office of Public Guardian website. Okay, there's a list of certified GPs that you can go to. Psychiatrics is another one. And last but not least, because it's a legal documents, certified lawyers will be able to attest or certify your LPA. So after your LPA is certified, you need to mail in, to the Office of Public Guardian for registrations, and then it will have legal effects. If not, there will not be any legal effects. Okay, but why is it difficult when it comes to executions? Okay, meaning to say that I already lose my mental capacity. I don't even recognize my family members anymore. So in a situation like this, even if I appoint Mark, how is he going to take care of me? Is he the most suitable person to take care of me? Normally it would be the spouse. But what if the replacement donee comes in? Can the replacement donee understand you well enough? If it's an LPA Form 1, I only appoint. There's no instructions given. So I'll give you one good example is my dad, So for my friends, my colleagues who knows me knows that my dad is living with dementia. Okay, and prior before this, he didn't do up his LPA. Okay, so which is a sad thing. Because I cannot make decisions for him on behalf, And now he is more like bedridden after losing mental capacity for a couple of years. 7 years to be exact. So he is more like bedridden. So I cannot go to the hospital for him to collect medications and all because he did not appoint me. So in a situation like this, I can tell you the cost of living increased tremendously. Okay, I have to engage the doctors for home visit to come over to see him. And then prescribe him the medications. Then we can go and help him to do the purchases and all. And one very important thing is my mom in the past used to use his ATM card to buy groceries for him, right? So my mom loses the ATM card. Back then he is still wheelchair bound. So we actually push him to the bank, to get to do a replacement of the ATM card or withdraw some funds. So the thing is, after interviewing by the bank teller, it's deemed that my dad loses mental capacity and there is no LPA done. The card cannot be replaced. No money, no funds can be withdrawn. So in order to do that, we have to go through the court to apply this thing called the deputyship order. If a person did not do the LPA, a deputyship order is required. And the waiting time could be 6 months to a year, and it is very costly. I did one for one of my clients. It cost about 8,000 to 10,000.
Wow, that's
Yeah,
really
to do the.
John, just let me stop you here for a while because we got a lot of questions coming in from
Really?
online.
Okay.
Yeah. So maybe we can just focus on just targeting that. We really appreciate there's so much insight you have given the audience on this whole idea of estate planning.
Right.
Very quickly now, we want to turn our attention to the online audience. This question is from Alex1709. Can
Hi, Alex.
executor also be beneficiary? Very quickly.
Yes.
Yes. Okay. Yes. Can be. How about the other roles, the trustee, executor? Can they all be all the same people or
Can.
different? Yeah, can.
Can be the beneficiary. My wife can be my executor. My wife can be the trustee. My wife can also be the beneficiary. So one thing my wife can't be is the witness.
Yes.
So the beneficiary cannot be the witness.
Okay. All right. So Alex, we hope you've answered your question. Next one from KMSOE. All right. What if the family member or members are no longer Singaporeans?
I assume your questions is about
Relocation as well.
relocations, yeah, and I assume your question is that if the family member is the executor or your family member is the beneficiary.
Yeah.
Okay, so if the executors is not local, then it would be a little bit tricky.
Yeah.
It can be done, but it's a little bit tricky. It's just like, for example, if I have assets in another country, and I appoint Mark to be the executors. So Mark will not know how to go about in that particular country, assuming Malaysia, Thailand,
Be less well versed, definitely, and a bit, in a sense, handicapped, in the sense. To proceed on.
But if beneficiary wise, then no issue. Yeah, they can still come back and make claims,
Okay.
Yeah, that one no issue.
So in a sense, maybe for KMSOE, don't know how to pronounce that, but for yourself as well as many other audience that maybe have the same question in mind or even more complex questions, the best people to find are people that actually do this for a living, like John Pan as well as his firm. Because at the end of the day, estate planning is really not just about planning for ourselves, it's planning for our next of kin and our loved ones.
Correct.
Right? And we have heard from his personal story, and it's thank you for being so vulnerable to share with us. And indeed,
I'm very open.
It is something that needs to be done, but many of us think about it. For whatever reason it is, I think it's COVID has taught us, how to seize the moment, and more than that, be grateful for every moment we have here on this side of eternity.
Of course.
Okay, next question that's being thrown out. Just let me see that here. If there's any, okay, it's still being typed out. No worries, we'll get back to that in a moment. In the meantime, John, is there anything that you and PFP maybe have in store for the audience?
For today, of course, we do have.
With regards to estate planning and all of this.
Okay, as you can see, as you can see on the slides here, we normally offer as a package, for LPA, Form 1, a standard will and a 1-year will custodian services, at the price of 250. So usual walk-in is 380 but I've been conducting webinars on and off during the COVID period. So the price for participant who attends the webinar will be 250. But for today especially, my boss came up with very attractive promotions. It's a bundle deal. Okay, bundle deal meaning to say that if a person is going to take up a whale bundle, for two, at the price of $300. It's only $300. That means to say that it's $150 for one person. And it includes the same standard package, a standard will with 12 different clauses, and LPA Form 1, as well as a 1-year will custodian services. Okay, so how to express your interest? Very simple. Scan the QR code here, and fill in the form. When we get your contacts, we will get in touch with you. Our certified estate planning practitioner will get in touch with you very shortly, and we will fix an appointment from there. All right?
Don't worry, we'll just leave up this slide for a while more. Let our audience
appreciate.
As well as to let them take a screenshot or even scan it. In the meantime, just hear my voice. I'll read out a question from one of the audience.
There's a question coming in?
Yes.
Right, okay.
There's one last one, very quickly, maybe just 30 seconds for you to answer.
Okay, come on.
For in estate cases, what if surviving family members are not as per stated, but a bit further away, such as brother-in-law, nephews, or will it just go to the government?
Okay, very quickly, 20 seconds left. So if it's not stated there, then they don't have the rights. They don't have the rights, yes.
Okay.
So if it's not stated there, then last but not least, you go to the government, yes.
Okay.
You can actually Google the Singapore Intestate Succession Act. It's all there. It's all there.
That's right. Or you can actually just
Do a will.
Scan the QR code and find them. For any other questions that you may have for this very important conversation that we usually don't have about our lives and our life after we passed on. So once again, audience, it's been a pleasure on behalf of the audience
Thank you.
to have you as well as Tiger Brokers.
Thank you.
For coming on, John. Nice seeing you again.
Yeah, nice seeing you again.
Christmas.
Yeah, right. It's a privilege to be here. Thank you so much.
Okay. Now, without further ado, we're going to go back once again to the whole idea of WWTD 2022, Investing Tomorrow Today. And once again, going to highlight what's going on at the Experience Store. But before I do that, I just want to say that we have come to the end of the fundamentals of investing, okay? And we're going to move on next to advanced trading strategies in the afternoon session. All right, so you want to stay tuned for that. We're going to begin at probably about an hour or two time, all right? Okay, lots of interesting speakers. We've been so blessed here at Tiger Brokers over this weekend to have so many esteemed speakers share their expert and experience with us as well. So once again, the Tiger Brokers Experience Store happening right now, okay? Your last chance is up to 7:30 p.m. today, all right? Tiong Bahru, Yong Siak Street, claw machine is there. I've said it many times, head on there. Win yourself awesome prizes. These are the awesome prizes you can win, okay? Tiger Brokers, Year of Tiger. I'm Tyson Ye. We're giving out 888 Tiger coins, amongst many others. Apple AirTag, limited edition Tiger Brokers merchandise, commission-free voucher, and $50 to $100 stock voucher, okay? These are the participating outlets, all right? Free gelato, free cup of coffee, 10% off, okay? Tien's, Chapter 55, Drips Bakery Coffee, as well as Old Shifu Charcoal Porridge, all right? And of course, when you're going about doing that, all right, please remember to take a photo or just catch these Tiger dolls, because why? It's very important for you if you want another chance at the claw machine, all right? Okay? And we got your transport covered as well. 9 a.m. to 7 p.m. today. So all the way up to 7 p.m., okay, at 30-minute intervals. These are the details, okay? So just stand by. You can take a screenshot of this. I'll leave this on for another 3 seconds. Okay? Yeah. Come on down, okay? All right. And next up, we've come to the end of the last day, rather, your last chance, all right, to win awesome vouchers that are as good as what John shared about his company, okay? So that's QR code and the promotion all the way up to 31st March this year. I believe some of the promotions going on as well on our landing page, okay? When you tap the yellow egg, it's also up to that duration, okay? So it's either end February or end March, okay? So you want to make sure you get those. Of course, you need to download the Tiger app for those of you tuning in from YouTube, yeah? Okay? And of course, for those that are starting out in this investment journey, okay, we've got a unit trust starter pack. Expose yourself to global equity and global bonds, all right? And get up to $50 off today, all right? And here's the thing, for students, if you're considering a career in asset management, we'll be happy, all right, if you go down to the Experience Store and if you complete a quiz there, you can stand a chance to win a networking lunch or session, okay, with one of the 4 houses that we have had the speakers come from: Fidelity, Franklin Templeton, Lion Global Investors, as well as UOB Asset Management, all right? And for those of you also that are a little bit further in your journey or just starting out, also even, we've got 0 subscription and redemption fees. We got 0 interest on margin loans for USD 1,000, under 1,000, yeah? And we've also got 0 commission for micro futures, okay? All right? Okay, I'll just leave this up here. Scan the QR code, find out more. We have heard throughout the whole of yesterday as well today is really to do your research. So whatever I'm sharing with you, head on down to the Tiger app, read more about all of this, and then, of course, if you feel it's for you, what are you waiting for? Okay, and in the theme of Chinese New Year, we are also having an ang pao bonanza, all right? So you collect your ang paos on Cash Plus. Guess what? It is no more Tiger coins here. Ladies and gentlemen, it is cold hard cash. Okay, so scan the QR code, find out more, head on down to the Tiger Brokers app, all right? And you'll be in for lots of goodies and prizes, okay? So that brings us to the end of it. Right now, I'm going to leave you all with the video of what's happening right now over yesterday as well as this morning at the Experience Store in Tiong Bahru. So sit back and enjoy.